What up? All right, we back. That just recorded the weekly overview. Went outside, wrestled with my brother. Now I'm back. All right, we got some shit. Uh, what was I about to do? Oh yeah. Google Docs. I'm gonna do it this way. Is this it? Yep. All right, bet. Oh, am I sharing my screen? No. Okay. Yo, I'm so fucking thirsty. So fucking thirsty. All right, first, I'm not going to talk about the trading plan off the bat, right? One sec. Hey, siblings keep you young. All right. Not the document I want to go over first. Let's go over trading mindset template, right? So when it comes to trading, mindset, psychology is the biggest factor in everything, right? I love hats. I love baseball caps, you know. So if y'all end up making like 100 bands or something this year, y'all should buy brother a baseball cap. I like baseball caps. All right, let's go. All right, so trading mindset, right? So psychology is, I'll say, trading is 80% psychology and 20% trading. Cause boy, once you press getting into a trade, nigga, them emotions can run wild. You feel me? So this is why we have to set up a trading plan, a trading mindset template to take our emotions out of it. You feel me? Hold on, man. You're not listening. We set up a trading plan so we never emotionally trade because we follow the plan. The plan don't have emotions. The mindset plan don't have emotions. You have emotions, right? When you get on the charts, it's a saying. If you don't know yourself, trading is the worst place to find out. I know that was true for me when it came to trading. Helped me with my patience, help build patience. Sit the fuck down, watch, relax, chill out. You know what I mean? It helped me with resilience when things ain't going your way, charts ain't going your way, trades ain't going your way. Resilience to fight through it, to get better, to learn from my mistakes, to keep growing. Diligence to do the work and do it right, to do my markups and do it right, to go through the steps and to do it right, not to skip, not to jump, not to half-ass. Do it right. Trading mindset template, right? Read. The best thing we can do with trading is take our thinking out of it. The thought brings emotions. Your emotions, even you know what emotion is? Emotion is energy in motion, right? So your emotions is your energy. You want to keep your energy out of trading, whether it be positive, negative, whether you're happy, excited, sad, depressed, it's fucking anti. Keep all of that out the markets because none, even when you happy and good, because when you happy, you'll make mistakes. You're like, oh, okay, I got in this trade, did good. Oh, I'm doing good. I'm feeling good. I'm happy. I'm gonna keep doing it. And then you fuck up. Then you made $100 to lose 300 because you got happy. You didn't want to close your trades. You didn't want to step away. You didn't want to take your win. And this is why we have goals, things like that. All right, so we're gonna go through this mindset template. We're gonna go through the trading plan. I'm gonna go through my trading plan, show you guys how even though I've seen showing y'all how I trade so many times, show how I go through things, how my system works, and I'm gonna give you a template. You can build your own system. Identify what works for you. What's your niche? What's your path? What's your identifiers? What's your confluences? What's your risk? All of that is personally tailored to you. My plan can only be tailored to me. Unless you want it, then you can have it. And I mean, I think it worked pretty good for me. Right. So the thought brings emotions, bias, and chaos. You want to trade with a system. A system allows you to take the thinking out of trading and allows you to only take the trades that give you high probability setups. Now, one of the best parts of a trading plan is it allows you to look back at the trades to improve where needed. Because when you have a trading plan, when you have a system and you journal, and journal is important too. Can't believe I just remembered that. Journaling, right? When you enter a certain trade, like if you're getting in GU buys, enter, okay, on this date, I got in GU buys for why? What did I see? You know what I'm saying? Oh, I saw this, this, this. These are where my confluences. These are my take profits. This is my stop loss. Um, Boom. Once you got that all written out, boom, boom. Take a picture, screenshot the chart, take a picture of it if need be. You know, find a way to save that. So you're able to come back when you're going through your journal, you're able to come back and look at previous chart data, previous notes, um, and really be able to do your thing. I used to actually have, I deleted it. I used to actually have like a little private like channel in Discord. That was my trading journal, just because it allowed me to take the screenshots and my notes. Uh, I might still have one. I know I got a written one somewhere. I might have a digital one copy still somewhere, but neither besides the point. All right, this is where having a trading plan comes in really good because you're able to look back at your things, right? You want to be able to look back and improve, look back and reflect. No matter if it was a winning trade, see, we could have got one better. We could have did something improved. You know, what was our biggest lesson from this trade? What truly made this trade impactful for us? Um, and I want you to commit to this trading mindset template, just like I want you to commit to your trading plan, right? Commit to it 30 days, using it constantly, right? And then after 30 days, review it, reflect on the experience of it. Did you see improvements? Did you not see improvements? Where are these areas where you're seeing improvements or you're not improving? You know, all of this matters, right? And then once we set up this trade mindset plan, we will decree ourselves, you know, self-committed to this document 30 days. Boom, I insert my name, Kevon Bell, shall follow, commit myself to the outline trade mindset plan, blah, 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 blah. I review in 30 days. Boom. First thing on the trading mindset is your trading goal. You know what I mean? What's your daily goal? What's your weekly goal? What's your monthly goal? What's your yearly goal? What are you trying to get out of trading? You know what I mean? Like numbers. I want you to be realistic where you are. I want you to be realistic and futuristic. I want y'all to see my hands crossed. Lean back, realistic and futuristic. What do I mean by that? I want you to be realistic in your abilities today and futuristic in your abilities tomorrow. Don't limit yourself by what you can do today. Limit yourself with nothing and grow and become something better tomorrow, right? So it's like the same thing they say with business. You don't make your business for where you are today. You make your business for where you want to go. You build your business and your business structure, your business model for where you want to go. And then once you got that set, you work your ass off to get there. You don't, oh, my current daily goal is 2%. So as long as I'm making 2%, I'm good. But if in a year your daily trading goal is 10%, you need to take your 2%, analyze it, review it, reflect on it, and see how you can turn that 2% into a 10% gain. Or that 2% in the 4, that 4 in the 8, that 8 to 10, 12, 16. I ain't trying to aim that hard on a daily basis. That's right. So you want to outline that. Want to outline that for yourself. What is your risk percentage? What are you willing to risk of your account balance? Now, the general rule of thumb is you never want to risk over 2% per trade. Me personally, I never want to risk 2% per trade over 5% daily, and I never want to risk over 10% for a week. You feel me? So that is my outline risk percentage. And why does this help your mindset? Because when you know your risk, it helps keep your emotions out of it. Like, or it should allow it to, because you've identified your risk. The worst thing in trading is you get in the trade with no stop loss. Don't be trading US 30, NASDAQ. You know what I'm saying? It don't matter what you trading. Right lot size, anything will tear your ass up. You know what I mean? So you want to make sure that you limit the attacks on your mental space by limiting the attacks on your balance space, right? Your account balance. So when you already got your predefined risk, you gotta accept the risk. Don't set a 2% risk or 3% risk or a risk limit and then not be able to accept it. And then when you about to hit your stop loss, you got anxiety, you freaking out. Oh, what's going on? What's happening? Calm your ass down. You made your move, you made your play, reflect, analyze. You hit your stop loss, reflect, and analyze. Don't move your stop loss. You know what I mean? Even if the trade ends up just tapping your stop loss and going back up, reflect on what you did wrong. Or reflect on how the market moved. Reflect. The market's never going to do the same thing twice. I don't know who told you it is, but it ain't. There's never the same people in the market. It may move similar, but it ain't gonna never move the same way twice. Every second in this market is different. In any market, every single second is different. You know what I mean? Every trade is different. Every week is different. So you gotta put your mind space in the fact that you don't know what's about to happen. What's the man? I used to have man. I'm gonna show y'all something. Oh, found it. Give me a second. All right. Whew. I got a lot of books, and they kind of like stacked up on top of each other. So we take this book right here, "Trading in the Zone" by who is this? Mark Douglas. This is a gem. I don't care if you trade cryptos, indices, stock market, futures markets, options. This book right here, when it comes to mindset, shout out to Money Mike, man. Once again, shout out to Money Mike for the put on. I heard about it, but I ain't take the book recommendation seriously, so I had heard it from Money Man Mike. But one of the first things we talk about is actually accepting the risk of a trade. Truly, in your heart, in your spirit, in your mind, accept the risk. Accept that you don't know what's about to happen. Accept that every moment is different. Accept that you don't have to know what's going to happen in the market to prevail in the market, and you will prevail in the market. Matter of fact, I might reread this book again. Actually, I took really good notes on it. That's another thing. Read good books and take good notes. So you don't got to read the book. I got some notes, great notes. I can read my notes. Um, but accept it. Accept the risk. All right. I can't stress that enough. You truly got to accept the risk, because it's in your biggest mistakes come in not accepting a risk or not respecting risk. Because sometimes you just don't respect it. You want to put a 0.5 on like GU or something with like a $200 account. Like, oh, I know it's gonna go up. Oh, I know it's gonna go down. I got these. I'm confident. Yeah, yeah, yeah. I hear you. But what if it don't? And I'm not a negative thinker. I think you should always think positive. But you in trading, you got to think about the reverse. What if it don't? That 0.5 gonna blow your account in a snap, or at least it's gonna hit your account something so devious. It's gonna force you to force close the trade, which is gonna kill your mental amplitude. Because now you're damn. I just lost such amount of money. Like, Thought the trade was gonna hit. It didn't. I don't know why I did that. That was too big. I should limit all that BS. You feel me? Limit all the BS. Take it out your system. Set your risks. Set up a risk plan. Risk management. Risk management is important. Risk management is so important. I should change that. Trading is 80% psychology, 10% risk management, and 10% trading. It really is like 15% risk management and 5% trading, because if you can't control your risk, you ain't gonna be trading for too long. You hear me? Anybody who done blown an account, they know you can't control that risk. You ain't gonna be trading for too long, baby. You feel me? Shit, let's talk about it. All right. So you gotta be, you know what I'm saying? What's your daily? Same way you got your daily, weekly, you know what I'm saying? Trade and goal. You also need to have what's your daily trade risk percentage, right? What's your per trade risk percentage? What's your weekly trade risk percentage? Hold on. This is almost 11. Y'all know I like football, so I need to see what games come on real quick. Oh, it's Sunday. It's Sunday. Ain't no college ball. I'm tripping. 12 o'clock game on Sunday. All right, and now we're gonna identify, even though when it comes to, all right, what happens when I take a small win or a small loss? What am I doing, right? This is when, like, you sit back and you reflect. Like, for me, I think I said, when I take a small loss, I just sit back and I reflect on my trade. I analyze it for an hour. Set you a time on, like, analyze the trade for 30 minutes. Analyze what I did wrong for 30 minutes. Reach out to somebody who's wiser, smarter, better than trading than me, right? Ask them a question like, hey, how could I have moved better? How could I have did something different? How could I, you know what I'm saying? Is there anything you see that I did wrong that I could do right next time? It's okay. I'm gonna tell you this. You gotta be stuttering. You will become your best trader when you stop being scared to ask questions. You can, matter of fact, hold on, let me spin it. In life, you hear me? In life, when you accept the reality of being a fool, only when you accept the reality of being a fool can you ever be an expert. You hear me? Y'all not listening, man. Only when you accept that. Because you got anybody who's an expert was once a fool. You feel me? You had to be a fool before you was an expert. You didn't know it before you knew it. But it's in the essence of knowing and being okay with not knowing that you don't know. And then, like, okay, I know I don't know this well enough, or I know I don't know this to the level or the capability that I feel or I think that I need to. So let me play the fool, get the game, then let me act like I know something, because now I do. You can't act like you know something when you don't know nothing. But next thing you got is, what the fuck? So is this your crop?
Yeah.
Give me my crop.
My crop.
Is this my crop?
Is it? Nah.
Hold on. What's yours? Nah, this is mine.
Bro. Hey, bro.
I got 10.
I got 9.
Okay, this is mine.
It's mine. What's up?
We had a crop switch up. We had a crop switch up. That was funny. I can't wait to rewatch that movie because that was hilarious. What do you do when you take a large loss, right? But you shouldn't take no large loss because that's not in your trading plan. The only loss you should take is a 2%. Really, personally recommended. Now you can take a large loss because, hey, I can't tell you your risk percentage. You want to trade up to 5-10% on a trade, hey man, you have at it. But all I'm gonna say is this: if you trading a stop loss, that's 10% of your account, or you letting trades run up to 10% of your account, and you know what I'm saying, drawdown type shit, you only got 10 times to do that before you gonna need another account. You feel me? I traded 2. You do the math. How many How many more trades do I have to fuck up and still be in the game than you? If you trade those high 5, 10, 50, man, I've seen people risk 20% on a given trade. I done did it. And when I do it, I look back like, you's a dumbass. Because why would you risk 20% on one trade, bro? 20 and not studying the stop loss, bro. It gets you. Don't let it get you. All right. What do you do when you take a large loss? Now that's up to you. Me personally, I don't do that no more. I don't take large losses. But when I did, you gotta take a step back, reflect 24 hours. You gotta punish yourself. Cause like oftentimes we'll hold other people more responsible than we'll hold ourselves. You know what I mean? Like if somebody did something that deserves reprimandment, punishment, you know what I'm saying? Let's say you got a dog, your dog chew up a paper or shit in the house, you'll punish your dog, you put him in a cage, you put him outside. Punish yourself. You fucked up. You know what I'm saying? You take a big loss, you shit it in the house. Go to the cage. Go back to the drawing board. You need you to write, I will not fuck up again. I will not take a large loss again. Write that. Y'all ever had to write out your parents ever made you do something and your parents make you write it out like 100 times? I remember one time I cut my hair in like elementary school, like some scissors and shit. Had to write out, I will not cut my hair with scissors 100 times. You want to know what I didn't do after that? I never cut my hair with scissors again. You wanna know why? Because I wrote that shit so many times, it became ingrained in my subconscious mind that, man, I don't never want to cut my hair again after dealing with this punishment, getting my butt whooped, being on punishment, got to write all this out. They taking scissors away and shit. You know, I never wanted to be in that position again. So I punished myself, right? Set a punishment. That, you know what? The fuck? We don't get that. But set up a punishment when you don't follow a plan. You need to have like, all right, if I don't follow my trading plan, I'll take this type of mistake. I need to do this. Woo, woo, woo. Sit my ass down, write out what I did wrong, reflect on what I did wrong, talk to somebody about what I read wrong. Acknowledge your mistake. When you bury it, you know what I'm saying? When you push it to the side, we don't really fully like, nah, I really fucked up. I fucked up. I did the wrong thing. I know I shouldn't have. Reflect on it, really absorb it. Don't just say, oh, I kind of messed up. It's all good. You know what I'm saying? We got another day to trade. No, even though you do got another day to trade, fucking up ain't cool. Not when you can prevent it, not when you have a system, not when you have a plan to prevent it. The fuck you set up the plan for if you ain't gonna listen to it? Listen to the plan. And then if the plan don't work after 30 days, then you tweak the plan. Just little tweaks at a time. You know what I'm saying? To build up on. You don't never want to just fully new plan every 30 days, new plan, new plan, new plan. No, sit your ass down, set it, structure yourself to what you really identify. You know what I'm saying? How you really identify your trades, your best trade setups. Go back, look at your best trade setups, look at your best trades, see what made you get in those trades. Was it a bullish engulfing, bearish engulfing, morning star, dojis, candles, pin bars, double tops, double bottoms, head and shoulders? You know what I'm saying? What was it? You know what I'm saying? Overbought, undersold. Did you have a SMA cross? Whatever it is that you identify with in your trading style, identify that, put it in your trading plan, take the emotions out of it, and only trade with your trading plan because your trading plan don't got no emotions. And your trading plan should already be something that has proven itself to be of some credibility to you, right? Um, so what happens when I take a large loss? Sit your ass down. First off, I'm gonna tell you that. Sit down. Go sit down, reflect, take a day off the charts, whatever you gotta do. You know what I mean? To really put your mindset back in the right thing. What happens when I take a small win? I don't know. What happens when you take a small win? Congratulate yourself. You won. You did it. You did something. You don't. You can't be your best. You can't be the executioner. Your executioner without being your biggest support, right? You gotta support yourself. You gotta love yourself. You gotta be able to. I took a win today. I don't care if it's $1. You made your dollar. Clap it up, baby. You beat the market. Whether it was $1, 50 cents, $100, 500, you beat the market. Congratulations, man. Give yourself a round of applause. Congratulate yourself. Give yourself a little sweet piece of candy, and then get back to it. Reflect, analyze. Boom. I just need to do this. What I did to beat this market, I just need to continue to do this over and over and over again, and I'm gonna be good. I'm gonna be good and be straight, right? So small win, small loss, big win, big loss. Identify what you're gonna do in those situations. Identify when do I need to take a step away from trading. Sometimes trading can be a lot, man. If you got a lot going on with your family, your mental mind space, if you're not mentally all the way there, clear, focused, centered, step away. I'm telling you, I done tried dealing. The worst thing you can do is to try to deal with your personal problems in the markets. Don't allow your personal problems to trans over to the markets, because let me tell you, markets may not respect your personal problems and make it worse. Well, you ever been having a bad day? I'm just get on the markets and then turn a bad day to worse. I have. I promise you, I done blown the accounts. I done revenge traded, counter traded. If it's something wrong, I probably done did it. And that's why I can be so adamant and so intentful with wanting to prevent those mistakes from y'all. Cause bruh, that shit for the birds, man. If you can cut out all the BS nonsense, you'll be so much happier when it comes to trading. I promise you. I promise you. I promise you. I promise you, you will. All right. So do that. Identify that. I want you to. I'm gonna send a copy of this, right? But I want you to actually write it down. It's in it like all these. I got it written down. It's in the writing. When you write that thing down, you look at it every morning before you start trading. Look at your trading mindset template. Look at your trading plan. You know what I'm saying? Get yourself meditate. You know what I'm saying? Get yourself in the right space. Picture yourself winning. Boy, you a victor. You a victor. You heard. Hey, if you watch the weekly overview, hey, they doubted us. They ain't think we could win. You gonna let somebody tell you they don't think you can win? You told somebody you was gonna become a trader, a day trader. You was gonna trade in foreign exchange. You gonna trade crypto, stocks, options. Huh? You gonna do what? Come on now. When motherfuckers come up to you, how's that little trading thing going? Little? What? Fuck nah. Let them know who you are. Speak your name. Speak your power. Speak your truth. If you want it, I can't make you want something that you don't want. If you want it, you know how to talk your talk. You know what I'm saying? Do the work so you can talk your talk. If you ain't doing no work, you can't talk no talk. It's just all smoke. Do the work, man. All right. Now we're gonna go over, is that it on this? Yeah. I'm gonna let y'all see my trading plan. I had to tweak that up a little. I'm gonna introduce y'all to my trading plan, and then we're gonna go through the trading plan template for y'all to build out y'all own, right? So my method, I'm really a zone type trader. Right. So I identify when prices in major zones and I trade from there. Like if prices in between the zone, half the time I'm not even gonna trade it. I like prices to be in them zones, right? So my style, I'm more of a day trader slash I need to put day trader slash swing trader. That's my style, right? If you don't understand that there's three styles. You got scalpers, they in and out, their time frame is typically no more than like an hour time frame. Like they typically 5, 15, 30-minute time frames, getting in, getting out. Intraday day trader, you trading within a day. Most of your trades is closing the same day or the next day. You know what I'm saying? Swing trader, you holding your trades for a couple of days. You know what I'm saying? You looking at higher time frames. Uh Weekly, daily type 4 hour. Intraday, like my type of style trading, I'm more on 4 hour and daily. What's your time frame base? So with your trading style, whichever way you identify with, you need to identify your time frame base. So when I'm doing after I do my initial like Sunday type markup or I also do a top down analysis, right? So I'm breaking my charts down from monthly or the weekly all the way down to like the hour. But my base time frame is 4 hours. So on average, when I'm looking at charts, I'm gonna be looking at like the 4 hour time frames. The 1 hour got too much noise. The daily is too broad. The 4 hour for me is that sweet spot in the markets that allows me to see what's going on and how it's been progressing in the markets throughout the last couple of days. You feel me? Um, so I like the 4 hour time frame as my time frame base. My risk to reward 1 to 3, baby. 1 to 3. I'm risking 1 to make 3. I'm risking 20 pips to make 60. If you ask why I trade 3, you should never trade less than a 1 to 3. Because when you do the math, I used to have the perfect scenario. And it's in the economy of education, but like I could take, let's just say I take 10 trades in a week. I could lose 6 of those trades and still have a profitable week. Because I lost, would you say, let's just say, in reference, 6%. But since I trade to a 1 per 3, every trade that I won, those remaining 4 trades went for 12%. You see what I'm saying? So even though I lost more trades in the week, I had more losing trades than winning trades. My winning trades were such winning trades that they allowed me to excel and still be profitable in the market. Now, I'm not saying you want to be taking a whole bunch of losing trades. I'm just saying you want to put yourself in the best position to be a winner. Come on. We don't want to be a loser. 1 to 2. 1 to 2. It's too easy to get down. 1 to 3 or higher. 1 to 3 or higher, baby. 1 to 3. Risk per trade 2% max. And I like to twig trade. So half the time I'll take a 2% max trade, break it down into 2 twig trades. Boom. We're gonna get to that later. My daily risk limit, 5%. I don't have my weekly risk limit, which is 10. My weekly risk limit is 10%. I never want to lose more than 10% within a given week. That's way too much. So what are you looking for? For me, I'm looking for price to reach support or resistance zones or quarter point levels. Once in these levels, I'm looking for price to show strength or weakness through my confluences. Okay. Hey, 1111, angel numbers. We locked in. Where my crystal at? Okay, I'm talking that talk. I got my crystal with me. It's my packet. It's my packet. My crystal. I knew crystal. I think like Thursday. I think it's pretty cool. Nah, Wednesday. I knew crystal Wednesday. I think it's pretty cool. Trade confluences. So mine, I am a naked type trader. Have you ever seen me? Y'all seen my charts, man? Stop playing with me. I'm a naked trader. I don't have really only indicator I'll somewhat maybe use is a RSI, and I don't use it in my trading. I just kind of use it as like, all right, are we overbought or oversold? This is nice information. No. Um, but my trade confluences, I like candlestick formations. So hammer, hanging man, double top, double bottom, morning star, evening star, bullish engulfing, bearish engulfing, doji, pin bar, advanced stall, advanced watch. These are the patterns. I forgot head and shoulders. Let's see. Yeah. Also head and shoulders, right? So these are the things when I see these things, when I see these type of confluences, these candlestick patterns or chart patterns in support or resistance zones, I get happy because that means we're going through step 1. We had support and resistance zone. Step 2, we found our identifiers and confluence. And one thing I like about chart patterns and candlestick patterns is that oftentimes they already have a built-in risk management into trading them. Like when you're trading a hammer, typically you get in a trade the candle after the formation of the hammer. And you push your stop loss below the wick of the hammer. You know what I'm saying? So that makes, understanding your risk management a little easier because you understand how to identify and trade certain patterns. If you want to learn more, it's two good book. I got a lot of books. 1 second. Uh, now, all right. All right, now this is Getting Started in Chart Patterns by Thomas Bull Calloway. I don't know, man. But I really found this to be a really helpful book. Also, let's see. Yeah, I still see my all right. Candlestick. Is it Bible? No. Oh, okay. Japanese candle. So there's the Candlestick Bible with the book. Right here. This Steve Nelson, the Japanese Candlestick Chart Technique. It's a big book. I'm not gonna lie to you. It's a big book. It's filled with a lot of patterns. Uh, a lot of patterns. But it's really, really helpful because now I'm not saying read every single pattern and understand, but read, learn, and then you know what I'm saying, see which ones work best for you, which ones you really like. Sorry, I got a ESPN alert about football. Hey, did y'all watch the games? Georgia was on fire. Fire. So was Miami, boy. That shit was sad. But learn your chart patterns. Learn your candlestick patterns. They are your best identifiers. Candlesticks are your best identifiers when it comes to price because they are showing you how prices move within a given hour and exactly how prices moving. So get up on that. Get up on that game. Get up on that knowledge. The best trading is naked trading. No indicators, no none of that. We see what price telling us, and we rock it off that. Um, so boom, I'm looking for clear signs of price rejection or continuation and support resistance zones based off my candle formation, confluences, or price structure, right? Um, so what's your entry plan, right? What's your plan on once you get in or how you get in? Once you identify that this is a trade you want to get in, what way are you getting in, right? Once, remember, I said I'm a twig trader, so boom. Once a high probability setup has been identified, we enter the trade with the stop loss 10 or 15, 20 pips below previous price action or signaling candle. So typically, whatever my signaling candle is, I'll put like my stop loss like 10 to 15 or 15, 20. It kind of depends on the candle, the formation, like trading is so case by case scenario. Well, out of it, my stop loss is not really more than like 10, 15 minutes below the previous pattern. Because you want to give your trade room to breathe. That'd be another thing. Gotta give some room to breathe. Like you gotta be able to have a little bit of you know what I mean? Um if I have like no direct action to the left or anything like that, or like a strong candlestick formation that I got in off of, my base like standard to be like 30 pips. Depending, and that all depends on my risk and things like that, how much I'm willing to risk. But it's kind of exit entry plan. So, like I said, I twig trade 2 entries, splitting up 2% risk between the two. So after about 20 pips, I bring my position one in a break even. I still let my position two run the same stop loss, same take profit levels. Um, and then once I'm at about 30 pips, I bring position two up to break even, and I bring position one up to my take profit one because I probably hit take profit at that point, or at least my TP1 level at that point. So then I'll set my TP1 at that, And typically my position two would be my runner. So I'll let that run off. I'll let it do its thing. Position two, no, I don't know. Position two is the one I let be a runner. Position one is the one that I monitor, and that's the one where I'm securing my profits for real, for real. That's my secure profit trade because you want to be able to secure some profits. So I'll move it up to stop loss one or TP one, TP two, and then I'll completely close out at TP three. Right. Position one doesn't go past TP three, or if I have a TP four, it don't go past that. Position two can do all the running it wants. Position one, you closing, I'm securing profit. I'm taking my money out the market. I'm having a good day for the rest of the day because I know I already collected profits. I got another position running that I can't lose money on because it's already set from my stop loss to a stop profit. So we're good there. We're not worried. Couple questions to ask yourself before placing the trade, and I'll just keep this at the bottom. What's the overall trend, right? So when you're looking at the daily or the weekly, it's gonna do one thing because it has a wider range of data, right? So it's gonna look one way. But when you start breaking it down in the smaller time frames, you look and you have current trends, right? So your overall trend, like we was, right? Higher high, higher low. But if you look in the point where it's making that higher low, that's going to be your current trend. And that current trend on a daily, like if you're on a weekly time frame uptrending, you may have like a current trend, like your current trend may be bears for like 2-3 days, but your overall weekly trend is still positive. You know what I'm saying? It's still overall bullish, but your current trend that's happening right now today, that might be bearish. You might be seeing lower lows, lower highs to reach that support zone to really go back up and create that new higher high, right? So it's all about understanding your overall, which is going to be identified depending on the style of trader you are. Since I'm a day trader, my overall is I'm looking at the daily and the weekly for my overall for the most part. When I'm looking at my current trend, I'm looking at the 4 hour and the 1 hour. I keep it simple. And since you can take these same questions, they're on the other one. Um, since I am a zone to zone trader, I always look for the nearest support or resistance or quarter point levels where price is sitting. So that way I'm always able to identify, okay, my next potential setup is going to come at this level or at this level, right? So I want to identify the levels around price that connect back with my trading plan. Are you looking for a reversal or a continuation? Um, I don't know if I actually want to ask this question, but it is a good question. Are you looking for a reversal or continuation? So, like, let's just take our example on GU this week. GU is severely, severely undersold, and I'm more so leaning towards a reversal retracement, not a full reversal, a small reversal retracement than I am a continuation for continued push to the downside, right? So within that, I understand that I'm looking for a reversal, but I also understand that I'm also still using my other identifiers and my confluences before I start to trade against the trend, right? Because the trend is your friend until the end when it bends, right? So if you're in a positive trend, you want to stay on that positive trend, right? You don't want to try to, oh, it's gonna go bearish. Why? Have some true identifiers, right? You see, I'm more of a continuation type trader. If you are looking for a reversal, what are your confluences for this bias? Like true confluences. Don't try to make it, don't force your bias to fit the trade, right? Don't force your bias to fit a trade. Fit your trade by what the trade is telling you. If the trade is telling you, hey, yo, I'm bullish, don't go in there trying to sell when market been rallying for 3-4 days straight. Actually, at that point, you might, but you get the message, right? So if the market's been rallying nice and strong, you don't want to be like, oh, it's gonna sell just because it's been bullish for too long. Shut up. That's not always the case. Let the market tell you what it want to do. Don't try to tell the market what it wants. You don't know. You don't know. Even the best investor, you don't know. You just guess really, really fucking good. You don't know. You don't got a crystal ball. No one truly knows. You're only making educated, speculated guesses. That's all trade it is an educated, speculated guess. We speculating. We don't know what's about to happen for sure. So that's how you and being okay with that. That will help your mindset tremendously. Just being okay with the fact that, bruh, you don't know what's about to happen. Once you stop trying to think you know everything, you'll realize how good of a trader you may or may not be. Be realistic with yourself. You may be a shitty fucking trader. You may be a bad trader. And you need to come to terms with that, identify what resources, baby pips, the academy videos, talking to me, you know what I'm saying, the live classes they start this week, reviewing, you know what I'm saying, YouTube, buying a book. It's a lot of things you can do if you identify you a shitty trader to not be a shitty trader. Gotta put the work in. Don't think you know everything. Go buy a book. Go buy some books, man. I done bought more trading books than I can count. I got chart patterns, trading in the zone, naked forex, forex trading for dummies, another chart pattern, but there's plenty of books down there. You don't get the knowledge by thinking you know it all. You get the knowledge by seeking it. You feel me? But it's 11:30. I got tired. I got hungry. Hey, I got the game. You feel me? I'm gonna send this to y'all. I want y'all to write it out. Write it out. Sign it. Date it. Come back 30 days. Boom. On the mindset template, on the trading plan. Write it. Sign it. Come back in 30 days. Review it. Review your process. And hey, like I like to say, I'm gonna see y'all at the top because the bottom too crowded. Shout out to my boy Charles Sway. That's all him. I got that from him. See y'all at the top because the bottom too crowded. So I mean, I love y'all. Let's have a good week, man. Let's kill it.